I think we're going to kick off in a second now. Perfect. I'll just wait for our slides to pop up there. Just 1 second. Perfect. Morning, everybody. So I'll just check you can see me. Yeah, that's perfect. So my name's Anthony. I'm the VP of Growth at Judopay. Thank you for joining our customer event today. It's great to see how much engagement we've had from our customers recently. 2020 has been certainly an interesting year for people personally at a working level, but it's also been a great opportunity for a lot of businesses, but it's also been quite challenging for some industries. I think from a fintech perspective, I think genuinely 2020, I think 2020 will go down as in history as one of the biggest key milestones, I think, in how payments have fundamentally changed and how people have changed the way they pay. One clear trend that's come out of this pandemic is that the shift from cash to digital payments has accelerated more than ever. If I use food and beverage as an example, how people pay has completely changed. Ordering through QR codes and apps is now the norm. It's not something alien to a lot of people. In fact, Alex from my team shared an article with me recently, and it was, let me just read this out, was those who are using mobile order pay solutions spend more than those who don't. And in fact, half of those who were surveyed said that actually they spend 2.5 times more than non-mobile users. So you can see that it's not just a behavior change, also people are spending more, which is great for all businesses. It's interesting stat, and actually we hear the same thing from our customers on the shop floor, and they're saying that actually they're finding their drinkers and eaters are spending more as well, because they're spending more time looking through their apps and looking through the menu and finding actually it's something, rather than buying their standard bottle of wine or whatever food it could be, they're going for something a bit more expensive because they didn't realize it was there. And other things we're kind of seeing is, I think, as Judopay, we're big advocates of mobile wallets, of course. And one of the things we were looking at today was Apple Pay now for a lot of businesses. We're seeing on average about 30 to 40% of their traffic is coming from Apple Pay, which is grown substantially. And we always knew it was a big piece of people's traffic, but it's exponentially grown since the pandemic started. And it's really now at a point where if you don't have it, it's probably going to have quite big impacts to your conversion rates. We've had a look at kind of Google Pay as well. Google Pay hasn't been as widely adopted as Apple Pay has, but we think that possibly is down to the fact the way, as an iPhone, you are proactively asked to sign up for Apple Pay as opposed to Google, where dependent on your phone, you may not be asked to sign up. And then, there's lots of different sectors, but from a retail perspective, high streets are losing footfall, but their digital channels are growing more than ever. Customers, right now, because of the pandemic and businesses maybe not doing so well in certain sectors, they've having to watch how they spend their money, which has meant they've actually had to adopt different ways to pay. Things like pay now, buy now, pay later, or splitting payments over a certain period of time. So with all these trends comes complexity, need for education, and that's why we wanted to host this customer event today. It's going to help you navigate the fintech world and maximize your digital chance for your customers. Topics that we're going to cover off today is we're going to have some time with James from our partners PPRO to talk a little bit about alternative payment methods. I think a lot of people have heard of some of these new up-and-coming methods, but may not know too much about them or how relevant they may be to their business model. And then we've got a session with Judopay's own Beth Alexander on chargebacks and the best way to defend them. And then finally, we'll have the showcase from our product lead, Jemina Hutchinson. So it's going to give us a bit of an overview of our product and feature releases over the coming months, and hopefully show some snippets of that great stuff. So super excited to see all that. If you do have questions during the session, just pop them in the chat channel, and then someone will pick that up and we'll ask the question and make sure we get answered. Otherwise, if you don't get a chance or you think of something afterwards, just give one of your sales reps or account managers a quick shout, and then I'm sure they can help you out. So without further ado, I'm going to invite James to the virtual floor. James, can you hear us?
Anthony, There we go. I can hear you fine.
Nice, nice. Hey, thank you for taking time out of your day, James, to come speak to us. Tell us a bit about yourself before we kind of get into it. For people who may not know you.
Yeah, happy to do so. So my name is James Booth. I'm the head of partnerships for Europe, Middle East, and Africa at PPRO. So I look after all of our PSP, banking, acquiring, or gateway partnerships. One of our key partnerships being with Judopay. And essentially at PPRO, we're an aggregator of local payment methods or alternative payment methods. So we don't work with merchants directly, but we work with wallets, PSPs, acquirers, etc., to help you enhance your local payment offering. So we have a global footprint, but we're very strong in Europe, the UK, with our current local payment method offering.
Nice. What made you go into alternate payment methods? It's a very, I guess people might say it's a niche market. What drove
exactly?
You
yeah, I mean, to be honest, everybody that I speak to, and actually most of the team at PPRO, we've all kind of stumbled upon it. Because if you think about local payment methods or alternative payment methods, it's been a slow evolution over time. I mean, back in the day, some of the most popular, let's say, local payment methods or alternative payment methods in Europe were bank transfer schemes. So talking about Judopay or Sofort or Ideal, etc. And in their infancy, they were maybe more geared towards, let's say, more high-risk verticals because they inherently don't have any chargeback risk. So those types of merchant verticals preferred accepting these methods. But over time, and as consumer preferences have changed, they become more mainstream. So I didn't really know about local payment methods at all. Previous to PPRO, I worked for a mobile point-of-sale startup called Pay11, which got acquired by SumUp. And I was always interested in e-commerce. So I knew a lot about sort of SMEs, micro merchants through a mobile point of sale device. And I always saw a huge opportunity in e-commerce, digital payments, and actually stumbled upon PPRO. So it's been an extreme learning curve over the past few years that I've been in the business. And the whole industry has clearly changed a lot. So to be honest, the short answer is I stumbled upon it.
It's funny you say that. I think I would, I'll probably ask the same question to the rest of the gang, but I think most people would say if you come into working payments, you've principally stumbled upon it. I've never come across someone who said, sorry, go on, James.
Yeah, no, I was going to say, it's the same. I've never met somebody that always wanted to work in payments from a young age. You always maybe start off in some other industry, you stumble upon it, but the best part about it is as soon as you're in the industry and as soon as you're in fintech, you become so passionate about it extremely quickly, and you find it's such an interesting space to work in, especially at this point in time when there's so much change going on in the industry.
And you to use an example, you mentioned Ideal there. So for me, I know what Ideal is, but for some people in this audience, they may not necessarily have heard of it. Can we use that as an example and maybe just to give a bit of insight of what is Ideal?
Yeah, so I mean, I always use Ideal to begin with because it is one of the gold standards of local payment methods, and that's only really because it has such a high market share within its country. So Ideal is a bank transfer method out of the Netherlands, and essentially what it is, it's a straight debit or straight bank transfer out of your physical online banking environment. So let's say, for example, I was shopping online or I was shopping through an app, etc. At the checkout point, instead of entering your card details or being redirected to Apple Pay or that payment method, there would be a button there, Ideal. You'd select Ideal, and you'd be actually redirected to your online banking environment. On your desktop, you'd be redirected to your online bank's login page, or on your mobile phone, you'd just be redirected to your banking app, and you'd authenticate the payments within your banking environment and essentially push funds out of your account. So it's a push payment versus a pull payment, which is more of a card payment. And the interesting thing is around the world, there's so many different types of alternative payment methods. So in Europe, bank transfer schemes like Ideal are extremely popular. And then there's been a huge rise in them. In Southeast Asia, it's e-wallets all the way. You've got Alipay, WeChat Pay, GrabPay, for example, are extremely popular in those regions of the world. Then in Latin America, for example, you've got cash-based payment methods. So you would check out, at the checkout, you'd select, for example, in Brazil, you'd select Boleto Bancário, and you'd print almost a ticket with a barcode on, And then the next day when you're buying your milk or bread at the local shop, they would scan that barcode and you pay for your online shopping with cash. So there's all these different types of payments.
So you're saying you go to an ATM, you put in, I don't know however much your shop is going to be, and you take a ticket to the broker and say, here you go, that is my
well, yeah, so I mean it's because if you think about it, in a lot of developing countries you have quite a high unbanked population. So if they're unbanked, they don't have a credit or a debit card, or they don't have access to any form of, let's say, digital payments. So if you're buying something off any retailer online, you would check out and you'd select one of these cash-based payment methods. It would generate a ticket, and then you'd pay in cash at a local shop or a local off license or whatever the equivalent is in its local country. So for example, in Mexico, one of the largest local payment methods is OXXO. And OXXO is actually their national supermarket chain. It's actually on the checkout, you'll see supermarket. So it's the equivalent of having Sainsbury's Pay or Tesco's Pay. So you'd select Sainsbury's Pay at the checkout in the UK, and then when you're doing your shopping at Sainsbury's, you'd scan that barcode and you're just paying cash at the teller. Now, obviously, things are changing around the world, and we're seeing a lot of these cash-based payment systems going more digital. But it's a very interesting use case in how the payments industry is solved for including a large portion of the population in digital commerce.
Nice. I see. It's really interesting. I guess if we go specifically around, the current pandemic, we can't not talk about that. It's a bit of a broad question, but because of this shift, have you seen any particular trends that have kind of occurred in the APM space?
Yeah, I mean, we've seen a lot. I think, I mean, you alluded it to a bit in the beginning. I think you did a lot of the groundwork there for me because I think the pandemic, well, I know the pandemic has shifted, and it's accelerated the shift of digital payment adoption by at least like 5-10 years. It's accelerated it because if we think about why we use digital payments and why we use certain schemes, a lot of it comes down to consumer preferences. I go back to the example of bank transfers being popular in Europe, e-wallets being popular in Southeast Asia, or cash being popular in that's really down to consumer preferences and how they prefer to transact. What the pandemic's done is it's forced consumers to adopt new forms of payments or new payment rails or new experiences. And it's happened over such a long period. Well, the pandemic, we've all been locked in some form of lockdown for such a long period of time that new habits are being formed. If I think about the Southeast Asian example, e-wallets were very popular because to do a physical payment with an e-wallet, all it required was printing a QR code. So if you're a small shop, you could print a QR code, and anybody with an e-wallet there could scan the code and you could check out. That never really took off in Europe, and that's why maybe e-wallet adoption's been fairly slow up until now. We're seeing a sharp increase in these e-wallet adoptions because now when I go to a pub or a restaurant, it's very common to see a menu and a QR code. It's very common to transact or interact in a physical environment through a digital channel. And because there's that change in consumer preferences, we're seeing extreme widespread adoption in digital payments. So we're seeing a lot of these app-based payment solutions in pubs and restaurants completely skyrocketing. We're seeing retailers adopt alternative forms of payment because they maybe have consumer preferences at heart. And we're seeing this, really a shift in the way consumers perceive digital commerce, which is, I mean, it's extremely exciting for us, for sure. And it leaves a lot of opportunities for merchants to take advantage of the shift.
If I do, just because you talk about QR codes, I think QR codes was a bit alien to a lot of people. But as you said, right, people who have been fortunate to travel to Asia, you will know that QR codes is just
everywhere.
It's everywhere.
Yeah.
I think I did actually post on LinkedIn a little while ago of going to a food court, and there was, I think, more QR codes than actual food there. But with QR codes, I think from what I see is the two major players out there are things like Alipay and WeChat Pay. I think a lot of people may have heard of these names, but what are they? Can you give us a bit of insight around the penetration and whatnot?
Yeah, so Alipay and WeChat Pay, they're essentially, I mean, at their core, they're essentially an e-wallet. So it's essentially it's almost like a bank account, but it's an e-wallet where Chinese nationals will load funds into that e-wallet, or now the majority of consumers are actually getting their paycheck paid into that wallet. And they've built an ecosystem within the wallet. So it's not only used for payments. Payments was the first use case that drew a lot of users into the ecosystem. And they've now built a lot of value-added services around the app. So you can, within these apps, for example, WeChat Pay, WeChat Pay actually started off as a messaging platform. Then they built in payments. Alipay started first as payments, but now you can invest through the app. There's a range of stocks you can invest in. You can hail cabs through the app. You can socialize. There's social media through the app. You can get food delivery through the app. You can order laundry pickup and delivery through the app. It's really become a giant, super app within your mobile phone. You know, we're used to having iPhones or Android phones where we have 20, 30, 40 different apps on our home screen. What you find with Alipay users is they might only have a handful of apps, but they're going to go to Alipay or WeChat Pay for a variety of services.
Nice.
Payments being one thing key.
Yeah. And how does that? So I've been on a couple of different websites, and I guess from a lot of our customers here, they're probably asking, well, why is Alipay, as an example, relevant to me? Could you talk about why is Alipay something that customers here should completely ignore, or is it something that they should actually be looking at adopting?
No, yeah. So I think because of it's definitely something that you should look to adopt, and actually just alternative payment methods in general is, depending on your business, is definitely something that you should adopt because of some of the reasons I mentioned earlier on. Because there's a widespread shift in how consumers are transacting online. There's specific preferences are coming into place. With Alipay and WeChat Pay specifically, they have completely dominated the e-commerce or e-wallet landscape throughout China. So, and actually not even China and Southeast Asia as a whole. So if you have any form of cross-border business, it's extremely relevant. If you're in the hospitality industry, well, let's say more the travel hospitality industry at this point in time, where you're seeing tourists coming from out of town, in many cases, that will be one of the only methods of payment that they have. They don't carry a Visa or a MasterCard. They'll either have Alipay, WeChat Pay, or they'll be forced to get a travel card when maybe traveling to Europe. And really, because of some of these consumer preferences, they will choose one restaurant or pub over the other if they're able to accept Alipay or not. Same with online e-commerce. If you're a retailer, by not offering those payment methods, we see cart abandonment skyrocketing. And we're starting to see significant amounts of cross-border e-commerce. And pre-pandemic times, we were already seeing a lot of cross-border travel. So we expect that to increase once things get back to normal. And it's not only Alipay and WeChat Pay. I think those are the main ones to start with. And then it's a bit of an exploratory process that you need to go through after that to fine-tune your offering.
Nice. And if we go a bit closer to home, I'm sure that a lot of people have seen the branding for Smooth Payments. What is Smooth Payments about, right? This big pink brand that's out there, Snoop Dogg's on there, so, obviously I'm talking about Klarna here.
Yeah, Klarna. Yeah.
It's a very interesting brand. Can you tell us a little bit more about that and how that's going to revolutionize how people pay, right? I think that's probably a safe.
So again, it's another example of a very strong local payment method. It's another example of another form of alternative payment method. So Klarna at its heart is essentially a pay later payment method. So it's an invoice-based payment scheme, but they've now split it up into 3 offerings. So when they were founded, they were founded in Sweden. It really began as a Nordic payment method. Pay later products in the Nordic region were extremely popular. They've now expanded into Germany and the UK. Now, specifically for the UK, what's becoming extremely popular is their pay later or slice it product. So essentially at Hop, they've got three products. They've got Pay Now, Pay Later, and Slice It. Pay Now is a normal bank transfer payment method within the checkout. Pay Later is a delayed payment. So you would purchase goods, but you'd only pay in maybe 30 days. And then installments, it's installments. You'd pay over 4 installments, 6 installments, 8 installments, depending on what option you choose. So essentially, it's another form of credit. So instead of using a traditional credit card, you would use Klarna and you would choose what type of installments or pay later offering you would like. And it's becoming extremely popular in the UK. I'm just looking at some stats that I was given. So, I mean, so far, Klarna announced recently that there are 7 million consumers have used the services in the UK, which is twice as many as last year. So they're already seeing a 100% growth rate compared to last year. And they're seeing about 55 new consumers adopting Klarna every week. So it's really, we're starting to see extreme growth through that. And it's really relevant for the retail space, I'd say, or high value goods. Because what the trend we're starting to see is you would go to a traditional retailer, I'd maybe buy 3 or 4 jerseys, 4 or 5 shirts. I'm maybe not sure on which ones I want to keep. Obviously, I'm not able to go into the store now and try them on, or maybe I don't want to. Get them delivered to my house, select which ones I actually want to keep, return the rest, and Klarna would actually net those payments out in the interim. So I'm actually, at the end of the day, only paying for the goods that I'm keeping. So it's a really different use case. The additional benefit for the merchant is they actually get paid upfront the full amount. So consumers get the option of paying when they like. Merchants get the benefit of getting all the funds up front, and then Klarna manages how they collect the funds with the consumer over time. It's a very interesting proposition, and it's extremely popular.
Nice. No, it does. And I think, we've seen that across the board. And just on all these payment methods, Klarna, WeChat, Alipay, and the question that's come in here is, and I was going to ask you, because I expected someone to say this, is, can you have too many payment methods? How does it work if you want to offer lots of different types? Will your payment page get cluttered? So, what are your thoughts on that?
Yeah. So I mean, the short answer is yes, you can have too many payment too many payment methods on the checkout, but there's a big caveat to that. All of these local payment methods that I'm talking about are very regionalized. So for example, Klarna is specific to a region. Ideal is only relevant for Dutch consumers. Judopay or so forth are only relevant for German consumers. Alipay, for example, is only relevant for Chinese consumers. So what we tend to do, and what we tend to try and recommend merchants do, is try and optimize the offering compared to where the consumer base is. And if they have a truly global offering, there's some easy strategies that we use to optimize what to offer at the checkout, whether it's checking a consumer's IP address and displaying payment methods according to an IP address. If they have to sign in for an account or create an account with the service, they're entering a hometown or a home country. So then only displaying those payment methods relevant for that particular country. So there's a few easy tools or easy criteria that you can select to fine tune payment methods. I mean, if I take, for example, PPRO, we offer over 140 different payment methods, but there's never a scenario where I would recommend a client uses all 140, because the use case just doesn't work. And there's also some payment methods that are relevant for specific verticals. So it might be that Klarna is very relevant for retail or travel or high purchase tickets, but it might not necessarily be relevant for a restaurant, for example. There's bank transfer methods and e-wallets that may be very relevant for restaurants and fast food or something like that, but not applicable for high value or purchasing an airline ticket, for example. And there's easy ways that you can fine tune that.
Yeah. Cool. That definitely makes a lot of sense. I think what people always said, the kind of the 80-20 rule of, as long as you can service about from what I've heard, 80% of the market that you work with is probably enough. You're never going to, like I said, get to 100%. I'm just conscious of time that we're going to move to the next one. But I think, one question I do have is, over the next, from what you're seeing, over the next 12, 18, 24 months, is there a particular payment method or payment methods that it's super exciting for you, that's getting you personally excited, or something that's getting people super excited about?
Yeah. I mean, how long do you have? if I'm limited to time, I mean, there certainly are a few payment methods that really excite me. Klarna being one. I think Klarna has a really strong foothold, and actually just the whole pay later space in general is one to look out for. But I think the thing that excites me more over the coming 12 or 24 months is more around how we as payments businesses and how between PPRO and, for example, Judopay, how we can optimize and take advantage of servicing these customers over this next period of time, because consumer preferences are changing. There is a huge opportunity to really build out extremely valuable and sticky solutions for clients, and I think that's really what excites me a lot. I mean, I just think about how over the past 6 months, how my preferences have changed. It's very normal for me to go to my local pub around the corner and pay through my app now. That app's been there for a long time. The adoption might have been slow, but now every single one of my mates use that. And that excites me, because once you pull in consumers into these experiences, there's so much you can do there. It's almost like the Alipay example there. Once you pull a consumer into this ecosystem, you can bolt in different products and different value adds. And we're starting to see that happen in specific verticals, which is amazing. That's really what excites me.
Nice. Well, thank you very much, James. That was an awesome session. I think a lot of people have found a lot of value in there. If people have got further questions, please keep sending them through, and we will either ask James at the end or get him to answer them post webinar.